Thank you. Your Royal Highness, Excellencies, ladies and gentlemen, good morning. It's a great pleasure to address this session on the role of development funding in driving financial inclusion. Thanks to Fintech Monday for facilitating. This is the first conference, I believe, of its kind in Oslo. I'm therefore pleased to see such a great number of international organizations, public institutions, startups, and established businesses here today. Financial inclusion can play a transformative role in combating poverty, hunger, and promoting health, and empowering women. At the macroeconomic level, financial inclusion can contribute to greater financial stability and GDP growth. And everyone committed to international development should have a keen interest in the potential for innovation to improve financial access for families, for small businesses who are currently unable to access these services. You know, farmers can increase their income using an app to reach new customers, or entrepreneurs can start or expand their businesses thanks to a loan they obtain using mobile banking. Nevertheless, 1/5 of the world's population still does not have access to basic financial services, such as savings, payments, and credit and insurance services that are crucial to get through times of hardship, such as floods and other natural disasters. Without access to such services, people's entrepreneurial skills remain underutilized, and their innovative ideas might never be realized. It is especially the poorest and most marginalized who struggle to access financial services. The UN Secretary General has made it clear that we will not reach the Sustainable Development Goals without making use of digital technologies. These technologies is a game changer in financial inclusion, making it unnecessary to build bank branches in every village. The spread of mobile phones and smartphones are among the most promising tools to address the gap between those with access to financial services and those without. Allowing people to access accounts on their phone means that hundreds of millions of people previously excluded from such services can find a way out of poverty, including many of whom are illiterate. Reaching out to the unbanked also represents a tremendous business opportunity for tech firms. Pakistan is a good case in point. 90% of the adult population do not have regular bank accounts. However, 60% use a mobile phone. In 2009, the Norwegian company Telenor, in collaboration with local microfinance institutions, introduced bank services through a system called EasyPaisa. EasyPaisa enables financial transactions through mobile phones. EasyPaisa mobile account is a virtual bank account that functions like a regular bank account. Another example is Kenya, where only about 1/5 of adults are banked. More than 90%, however, own a mobile phone. M-Pesa, a text message-based payment system, was introduced in Kenya in 2007 and is now used by 96% of households there. Studies have found that the spread of mobile money lifted 200,000 households out of poverty and has helped improving the economic lives of many more. These mobile payment systems have revolutionized payments in developing countries by including many previously excluded groups. Instead of waiting for banks to open bank branch, people can straight away make use of the most modern technology firms have to offer. This is just one example of how digital technologies may enable developing countries to leapfrog traditional stages of development. In addition, technological infrastructure is developing at a rapid pace, such as faster payment systems, along with the potential for more transparent and simpler products, enabled by lower cost processing. Remittances, that means migrants sending money back to their families and friends, is an example of this. Remittances from migrants are important sources of income for villages and families in many countries. The cost of transferring is often very high, and digital finance can lower the costs and transaction by cutting intermediaries. The Norwegian strategy for digitalization in our development policy puts great emphasis on creating new collaboration models and working in partnerships between the public and private sectors, in donor and developing countries alike, including knowledge hubs and civil society. I want to emphasize the value of close collaboration between governments and the private sector. Regulations and new business models need to be constructed in a way that supports innovation and entrepreneurship, while fully protecting customers and users, and promoting a stable financial systems in the countries. Norway has also for a number of years supported international initiatives working to promote financial inclusion. We welcome the G20 initiative on financial inclusion, and Norway participates actively in the G20 working group on financial inclusion. We have also for a number of years supported CGAP, who works to catalyze financial access for the world's poor, who are often cut off from such services. And the Better Than Cash alliances, the Better Than Cash alliance's movement from cash to digital payments to help achieve these SDGs. You will hear more from these organizations later today. There has been great progress in financial inclusion in the last years, but there is still a risk that people are being left behind. This is especially acute for marginalized groups, such as sexual and religious minorities and people with disabilities. There is still a considerable gender gap in access to financial services. How do we make sure that everyone can benefit from digital financial tools? Product design is an important factor for increased access for marginalized groups. The industry therefore needs to create services and products that are human-centered and focused on the need of the user, as stated in the Principle for Digital Development. These principles guide all Norway's development efforts in this area. This principle states that digital development initiatives should be designed in close cooperation with the users, be sustainable, and be sensitive to the context in which they operate. Furthermore, our efforts must be collaborative, meaning we should share information, insights, strategies, and resources across project organizations and sectors in order to increase efficiency and impact on the ground. I encourage all of you to adhere to these principles to avoid fragmentation of digital solutions and ensure that our endeavors are human-centered. Let me say a few words about the importance of infrastructure. For new technologies to benefit all, no matter how innovative or user-friendly they are, some basic precondition must be in place. This include establishing digital IDs connectivity, fair competition, and physical infrastructure. Government and the private sector must work together to meet these preconditions. This is why Norway is supporting the Digital Development Partnership, which is an initiative from the World Bank to enhance digital innovation and development financing. This partnership will benefit financial inclusion by addressing some of the infrastructural challenges faced by the industry. For example, a strong electronic identity has been an enabler for Norway's digital economy. It has made digital services available to and used by close to all Norwegian citizens. In humanitarian work, in crisis, secure and transparent and effective delivery of emergency supplies and cash have been a major challenge. The World Food Programme has collaborated with UN High Commissioner for Refugees to gain access to their biometric database. And the World Food Programme uses the database to verify the identity of refugees and is thus able to issue its cash assistance without using physical money to assist refugees in Jordan. This innovative use of biometrics and blockchain technology has saved the World Food Programme for millions of dollars otherwise spent in bank transaction fees. Norway therefore welcomes the Smart Africa initiative as a pan-African initiative to boost the digital economy and financial inclusion. For instance, through user-friendly and secure national e-ID solutions. This could serve both the public and private sector in African countries, and through common standards and regulations enable cross-border interoperability and trade. I hope that companies present here today will use their expertise and competence within this field to develop solutions to support such initiatives, to build increasingly digitalized economies. And I want to end by saying that technology, when used right, can support our goal of leaving no one behind. Smart electronic solution in the increasingly digitalized economy of developing countries that promote financial inclusion and stimulate job creation and trade represent a great opportunity for inclusive development. I therefore encourage all of you to consider the impact that your firm or organization can have to end financial exclusion. The millions excluded from financial services represent a valuable business opportunity also. I hope that you will use this summit as an opportunity to establish new partnerships between banks and investors, tech providers and regulators, and development organizations. And with that, move the needle on financial inclusion. I wish you all a fruitful and constructive summit. Thank you very much.